Hi there, it's Alec Hogg with our investment webinar for February of this month. And as you can see, the guy, good-looking guy with the glasses, he's just taken his glasses off with a bit of a pixelated background, is Kevin Shames. Kevin's the CEO of Bright Light Solar, and he'll be taking us through a presentation. The whole idea here is to, as you know, if you've been to any of our investment webinars before, is to keep it as interactive as possible and post your questions, but I'll leave that to our managing editor, who's not pretty enough to be on the screen, and his name is Stuart Loman. Stuart?
Well, thanks, Alec. As always, thanks to both of you and Kevin for being here as this evening. Those who know, there should be a little high-five signal on your control panel. If you can see those two pretty faces and the PowerPoint underneath them, can you just click that high-five button just so I can see? Well, I know that you can see and hear us clearly. Okay, Alec, I see some of those coming through, so that's good news. And as Alec mentioned, we do like to keep things conversational. So just on the control panel on the right-hand side, there's a questions drop-down menu. If you put your questions in there, we can pick them up and throw them at Kevin as we run through the presentation and sort of keep it nice and conversational. But all over to you guys.
Great, and it's pretty easy to fill in those questions. So please go ahead with them. I think, Kevin, without further ado, I'm going off the screen now, and I guess it's probably, you know, everyone knows you're actually there, so you could do the same as well, and then just take us through the presentation.
Great. So welcome everybody, and thank you, Alec and the Biznews team. I am going to be presenting to you on Bright Light Solar VCC. Hopefully many of you have been listening to the podcast and read Alec's wonderful missives about us so far. But really what I'm going to do is take you through from the beginning. I'm going to try and keep it relatively short because I would like to get access into your questions and to understand what kind of issues potential investors are facing. So what I'd like to do initially is just start off and introduce what Section 12J is. It refers to Section 12J of the Income Tax Act, and the executive summary that many people are aware of is that you get a 100% deduction against your taxable income in the year in which you invest. So what that means is it is capped at 2.5 million rand for an individual or a trust, at 5 million for a company. But what that means is that you get to write off 100% of this investment against your taxable income in the year in which you invest. Now, the taxable income is an interesting point because that relates to your normal income, your income from employment. It also includes income from capital gains. So anyone that has sold Naspers shares and has got a capital gain in terms of taking up their process, this is a great way of shielding your capital gains tax event from that. If you've sold any companies or any shares and you've got other capital gains, this is a great way of shielding that. And what this does is it offsets against your taxable income in the 2020 financial year, the year that ends in 17 days time. And we're assuming that you're a marginal taxpayer earning 1.5 million rand or more, paying tax at a 45% rate. That means that if you were to invest R1 million, that you would get a tax benefit of 450,000 rand against that. So effectively, SARS is contributing 45% of your investment capital into this investment. What are we and what are we allowed and not allowed to do? It's on the screen there. We're not allowed to invest in immovable property. We're not allowed to invest in banking, insurance, and financial services. And then there are the impermissible trades of gambling, liquor, tobacco, arms and ammunition, and any trade outside the Republic. We don't do any of that, so that's fine. It is open for any South African taxpayer, individual, trust, and company. And very importantly, you need to hold this for at least 5 years. So if you sell this within 60 months, for any reason whatsoever, you will have a full recoupment of your Section 12J allowance. By the way, that also includes death. So if you die in the next 60 months, your estate will suffer a full recoupment of that Section 12J allowance. And then a change that was made in 2019 was to cap these investments, 2.5 million for an individual and 5 million for a company.
Kevin, okay, let me just get this real straight in my mind. At the end of next week, I'm going to work out how much taxable income I've got for this year. And I'm then going to decide, then I'll see how much it is. Let's just say it's, just for argument's sake, it's 300,000 Rand. If I then make a 300,000 Rand investment into this 12J scheme or through Bright Light Solar, and you're going to tell us about the other returns later. But if I put it in there, will I then this year, this taxable year, be able to write that back against my taxable income? So I'll have zero taxable income, so I can get all my PAYE back.
That's 100% right, Alex. So you can use all of your taxable income. Bear in mind it's your taxable income, not your tax payable. So it's an offset against taxable income, but you will be able to deduct up to a maximum of 2.5 million. So if you earn more than 2.5 million, the limitation is the 2.5 million, but you can deduct all of this investment capital against your taxable income.
So it's actually, the higher your income, the bigger the investment you make, you can recoup all of your tax, or if you're a provisional taxpayer, you won't pay any tax because obviously you haven't paid anything yet.
100% right.
All right, should we hit the next slide? Here we go.
Great. So what I'd like to do is to introduce the concept of Bright Light Solar to you, what it is that we do, just so you can get an understanding of the business model. So this is our third tranche of capital raise. Our first tranche was closed in February 2018. The B tranche closed in February 2019. We are still in the process of deploying the B share capital. And the concept of Bright Light Solar is to provide our customers with fully funded utilities where we sell that utility to our customers at below their current tariff that they're paying for. Let me put that in English. That means that if, for example, we put up a solar PV plant and we sell electricity into a body corporate, into a commercial or an industrial customer of ours, we will then sell them the electricity. They don't pay any upfront cost whatsoever. We also cover all the insurance and all the maintenance. We maintain that for the full period that we own it, and sell the electricity to our customers on long-term power purchase agreements. And those discounts that we are currently seeing are sometimes as high as 40%. It really does depend on your location in terms of what your current utility bill and what your electricity tariff structure is. There are about 3,000 tariff structures in South Africa, so we can't just simply take a guess at what you have. But what we do is we look at your electricity bills. We don't do residential homes, by the way. We only do gated estates, commercial, industrial, and agricultural customers. And we then sell the electricity, as I say, for typically between 25 and 40% cheaper than they would be buying from their existing utility.
Sounds great. So let's just understand that. Let's just say the community that I live in, if the body corporate were to come in on this scheme, they would then not have to, we wouldn't have to, as residents, pay anything upfront for the installation of the solar, and our only requirement would be to guarantee that we'll pay you for whatever electricity you give us, but it'll be cheaper than what we're paying the Joburg Town Council.
Exactly right.
And that could be up to 40% cheaper.
Correct. So at the moment, we are only targeting your daytime use because we aren't bringing batteries to our customers at this stage. They just simply aren't cost effective enough, but they're getting very close. We reckon probably in the third or fourth quarter this year, we'll start bringing batteries to our customers as well. But it's exactly what you said is in terms of your daytime load, we'll be able to supply you that electricity at those kind of discounts.
Got it. Thanks.
Now, that was our tranche A and tranche B, which was focused exclusively on solar PV. What we're very excited to announce is that tranche C, the tranche that we are currently raising capital on, is now broadening its scope beyond simply solar PV into what are called solar thermal and atmospheric water solutions. Solar thermal is using the heat from the sun to heat water, and the advantage that solar thermal brings over solar PV is twofold. Firstly, solar thermal is far more efficient than solar PV is. But secondly, solar thermal comes with a built-in battery. Now, when you consider residential electricity consumption requirements, about 55% of your domestic electricity usage is for heating water. I'm going to say that again because it's a staggering number. 55% of your electricity bill is to heat your water. So if we can go and extract that 55% from your bill, use solar thermal technology to then provide you with this heated water, immediately what we'll be able to do is to drop your utility or electricity bill by 55%. Doesn't mean you're not going to pay anything, because obviously we're going to sell you that hot water solution through solar thermal, but we'll be able to do that at a very significant discount. And then what we'll do is we'll address your remaining 45% electricity needs through as much as we can through solar PV. What it also does is it reduces the requirements that we need to bring batteries. So by isolating your hot water requirements, we will make our solar PV and our battery requirements far more efficient than if we hadn't done that. And then the third utility that we're now in the process, hopefully, of bringing to market in the next couple of months is an atmospheric water solution that extracts water vapor out the air, puts it through a filtration process, and delivers filtered potable drinking water to our customers in a totally off-the-grid solution, once again at no capital cost to them whatsoever. And we will then be selling this off-the-grid water solution at rates that are substantially below what they are currently paying to their existing utilities for that water.
Okay, I think we're getting into a little bit too much detail now about your products, but it makes a lot of sense. You become a private utility to a gated community or to a complex, and you give them the electricity, you give them the hot water for the geysers, and you can even give them water. So is this all now the investors in this tranche, the people like me who are going to save on tax this year, and we're going to put it into the tranche that ends or closes on the 25th of February? Is this do we benefit from all three of those business models, if you like? Is that how you get to the 21% return?
Correct. And we aren't forecasting any allocation into the water because we're relying on a technology partner to deliver that solution to us. So what we are assuming is 50% into solar PV and 50% into solar thermal.
Is there a lot of demand, Kevin, for PVs and thermal by these gated communities?
Well, Alec, to give you an idea, we've done 1,100 proposals so far since Bright Light started 3.5 years ago. Those 1,100 proposals come to about 1.1 billion Rand of pipeline that we're in the process of working through, and it grows every single day. So the potential demand out there is probably not insatiable or infinite, but far more than Bright Light can satisfy over time.
But you're only looking for 100 million now to the end of February. What happens if you get more than 100 million?
So that's really important, and it's a question we are often asked at this time is, I'm managing my tax affairs. If I commit 300,000 Rand to Bright Light, I want to know that I'm going to be able to get that full tax deduction. So we can provide assurance that we will accept all monies that are invested. The 100 million Rand is a target, but we do have the ability to extend that target to accept all potential investment capital that is provided, and that is exactly what we'll be doing.
Stu, I'm not seeing the questions or seeing any questions. Have you got any on your side?
Thanks, Alec. One has come through from Lulamile. You mentioned you can't invest in fixed property. He just wants to know, is a solar installation not considered fixed property?
Lovely question. It's not considered fixed property. Fixed property is property that is immovable, and our solar PV and our inverters, all of our installation remains our property for as long as the contract remains in place. It is immovable, and we are able to remove that at any stage. One of the questions that's also asked of me is, are we exposed to risk of expropriation without compensation? We are not, because that expropriation once again refers to land, and our installation is fully movable.
Excellent, thanks, Kevin. As soon as you throw one, they all come, the questions. I've got a few that have come through now. From Vanessa, just wants to know how many of the 1,100 proposals you've done have been accepted, and how many installations can you handle at any given time?
So we are in the process of, we have approved 55 installations. We're in the process of, 33 of them are live. So we're in the process of installing 22 at the moment. It would be a wonderful problem to have, Vanessa, that we struggle on capacity, but fortunately there are lots of people that we can outsource this to if we do need, and there are a host of what are called EPCs that can assist us in the installation process. We have pre-approved a whole lot of them. They need to have, for example, what is called a PV green card, which means they are accredited by the South African Photovoltaic Association. So that's one of our requirements. And we have lots of them that we have pre-approved and we use in terms of that. So we're not concerned about that.
Thanks, Kevin. Dave just wants to know, are you allowed to feed back into the grid and get rebates?
So Dave, in some municipalities you can and in some you can't. What we do is we ensure that we size our installations that we don't feed anything back into the grid. It's only for self-consumption. The problem is it is just not financially effective to feed back into the grid because the tariff that Eskom will pay you on that is just far too low. So it's just uneconomical to do so.
Maybe a follow-up there, Kevin.
Yep.
If it became economically viable, in other words, if Eskom got really serious about wanting to reduce this gap that it has, and it said to people who have solar installations, feed it back into the grid, and here is a reasonable price. Have you got the facility to do that?
So it would be very site specific, that we would have to, because what we're doing is mainly rooftop installation, and typically the rooftop size limits us in terms of how much we are feeding into our clients, but there would definitely be opportunities where we could have excess roof space, but we don't foresee that being economical in the near term.
Keep going, Stu.
Thanks, Kevin. Yaku just wants to find out how frequent will returns be paid out, and he assumes the payouts will be taxable in the year received.
So Yaku, we pay dividends every 6 months from the first year. So an investor that invests in Tranche C would get their first dividend for the 6-month period ended August. That would be paid roughly about the beginning of October. We need our board obviously to go through and approve that payment. So we pay beginning of October, and the one to the year end for February would typically be paid roughly about the end of April. But it is a semi-annual dividend that we pay every year.
Excellent, thanks, Kevin. Linda's got something. She says, if the end user doesn't bear the capital cost of installation and they pay less for the electricity generated, how is a 21% return for investors achieved?
Lovely question. Thank you for that. So there are 3 components to that 21% return. And Alec, perhaps if you can go to the cash flow graph, that would help. So the first part relates to the Section 12J investment. Here you can see is that blue bar in the red bar in year one is assuming a 1 million rand investment. Obviously, we once again are assuming a 45% marginal tax rate, so you get that 450,000 rand back immediately if you are a provisional taxpayer, or as soon as you submit your e-filing if you are a PAYE taxpayer. You can then see the targeted dividends through the period. So the second part of the first part of your return is the 450,000 rand you get back. The second part of your return is the semi-annual dividends that we pay out, and you can see there year one through year four. And then because there is this 5-year lockup, we are assuming that the majority of investors wish to exit in month 61. That is 5 years plus 1 month. And that number there, that 1 million rand, is made up of a dividend and the expected repurchase of your shares, bearing in mind that the repurchase of the shares is you will pay capital gains tax on that, and that has a base cost of 0. So there you can see that minus 162.12 is looking at the CGT that you will pay on the repurchase of your shares. So those three factors, the upfront 12J allowance, the semi-annual dividend for 5 years, and then the third one being the sale of your shares in month 61, combined to give you a 21% after tax, after fee, and that is also after dividend withholding tax. So that 21% after tax return is net in your hands.
And the reason you can do this, or the reason you can get this, is because government wants to promote this 12J. What's the government's thinking behind it? Because clearly there's a serious tax incentive here for 12J, but what is it trying to achieve by making this incentive available?
The objective of Section 12J is to drive employment, and the government recognizes that employment is primarily driven through small and medium enterprise. So this is an incentive from National Treasury to allow high net worth investors to invest in these Section 12J companies that then redirect this investment capital into small and medium enterprise that is driving the growth in employment. So that is really important. There is what is referred to as a sunset clause, which means that the current Section 12J allowance expires at the end of June next year, and National Treasury are looking at this. We don't know whether they will be extending it or not. Very importantly, it doesn't affect C tranche investors or even D tranche investors, which would be February 21. But anyone that invests in a 12J scheme after June 2021 possibly might not be eligible for that upfront tax deduction, but we'll probably get clarity on that in next February's budget.
Now, you've been working with this stuff for a long time. C tranche, just for those of us who aren't as close to it, that means the money that gets invested this year by the 20th of February.
Correct. So the A tranche was February 2018, the B tranche February 2019, the C tranche February 20.
And then D tranche will be next year. So when you do the same thing next year to raise more capital, that'll be the D tranche. So we're talking about right now C tranche, in other words, the 2020 tax year to end February.
100%.
Stu, over to you.
Yeah, thanks, Kevin. Just to follow up on, you said what happens that, sorry, Panjak, just wants to know, if you don't sell on 61 months, what's the process after, or do you have to sell on the 61 months?
Lovely question, and we suggest to investors that you don't sell. Bear in mind, when you are selling to a consortium which includes the directors of Bright Light. So we are buying your shares back from you. Why would we be buying your shares back from you? Because we love the predictable future income stream that energy purchase agreements provide. You're able to predict with a high degree of certainty far into the future what your future cash flow is going to be. So that's the kind of assets that we love, and we would highly recommend that people don't disinvest, that you stay invested and invest along with us for the full period of up to 25 years.
But you can, that's the point. It's if you sell before year 5, then you've got to pay back the tax benefit that you had. But after year 5, you can stay invested for the whole 25 years if you want to.
Exactly. Exactly. So it provides a wonderful dividend stream long into the future. And if you don't need the money, then you're going to struggle to find an investment that's going to give you a better return.
Kevin, is the dividend stream growing? Because what you've got here at year 1, year 2, year 3, year 4, there's growth throughout there on those 4 years. Is that
there is growth? So we have 2 tax deductions. The first one is the tax deduction that the investor gets, the 12J. The second one is another tax deduction that we, as the operator, get in what is called our qualifying company. That is an accelerated wear and tear allowance. It's called a Section 12B allowance, and that gives us the ability to shield any income that we are receiving for roughly the first 7 years. When that runs out at the end of year 7, our dividend yield does drop, and then thereafter it increases again. And the increase that we get in those ongoing dividends is as a result of escalations in these power purchase agreements. And our escalations are linked to NERSA, NERSA being the National Energy Regulator of South Africa. They are the ones that determine what prices Eskom are allowed to escalate by, and we escalate at NERSA less 15%. So if the NERSA escalation is, let's say, 10%, the bright light escalation is 10 less 15%, being 8.5%.
Brilliant, thanks. I've got a follow-up from Tace. He just wants to know, how does the disinvestment price work? Is it specified, guaranteed, formulaic, or based on supply, demand, or willingness to pay from the consortium?
So, Tace, that's a great question. It is formulaic. It is written into the prospectus that we will discount the future cash flows at a discount rate of prime plus 2.5%. So we perform a net present value calculation. Prime plus 2.5 is the discount rate. That is audited by our auditors, who are BDO. And once they approve that, that will be the value at which we buy it. It is not a guaranteed buyback. The consortium does not include a bank, but we have lenders that have given us commitments. We're working currently with 3 lenders, so we'll work with the most, obviously the lowest cost and most advantageous lenders, and they have given us an undertaking that they will provide the kinds of liquidity that we need to be able to buy back those shares. But you are absolutely right, it is not guaranteed. It's an undertaking, it's not a guarantee.
Excellent, thanks, Kevin. Yolanda just says, good evening, please discuss the risk related to this investment.
So Yolanda, the risks are, we have tried as far as possible to manage and mitigate those risks as far as possible. So for example, 70% of the costs of our installation are imported costs. The panels and inverters representing 70% we pay for in US dollars. So what we do is, as soon as we know how much money has been committed in terms of tranche C, in probably the 2nd or 3rd week of March, we will go and hedge our exposure that we are exposed to in terms of our dollar rand exposure. And we will then take out, and we do it through currency futures. My background is I was a futures trader, so I'm very comfortable with futures as opposed to forward exchange contracts. If he sees you need to have an invoice to be able to take to the bank, with currency futures you don't, so it's much easier to manage in our kind of environment. But we do hedge that foreign exchange exposure, so that's the one risk that is removed. The other risks that we don't have is after the 1st year there's no interest rate risk, because it's only in that 1st year whilst the cash is undeployed that we're earning interest. So there's a little bit of interest rate risk in year 1. There is no equity risk. We are unlisted. That also means there is liquidity risk, because this is an illiquid investment, and you are obviously beholden, I guess, to us in terms of us providing that liquidity. Relating back to that previous question, you are always free to sell it to a willing buyer after month 61 if you choose, but the chances are we will probably give you the best price. The critical issue and the critical risk factor, and I would actually point all of you to our prospectus, which sets out all of these risks in quite a lot of detail. And if you go on to the Biznews website, and the link there will direct you, or we'll send you, and the link directs you to an email to Brightlight. We'll send you an email linking you through to the prospectus, and please have a look at those risk factors. The most important risk factor is the risk of the operator, because if the operator, the manager of the 12J plan, the fund, if he behaves badly and he breaches the requirements of Section 12J, there is a very punitive requirement that the commissioner will then advise you after month 36. That's the first time they do their determination, where they do a thorough review. By the way, we are regulated by both SARS and the FSCA, the Financial Sector Conduct Authority, the old FSB. So we are a highly regulated vehicle. But if you breach any of the Section 12J regulations, the commissioner then advises you of a breach, and if you don't fix that breach, then there is 125% recoupment of all the investors' 12J allowances back into the company. So it's absolutely critical that you have confidence in the manager. And what we do to provide you with that confidence is, first of all, we use the best advisors in the country. Our advisors are Cliff Decker Hoffmeyer on the tax side and Worksmans on the legal side. And we do check everything we do with them to make sure that we are fully compliant. But what we also do is we provide you with full transparency into our process. So we will give you our risk matrices, we'll give you our Section 12J compliance matrices, we'll give you access into our underlying qualifying company financial statements. You're welcome to come and sit with me as often as you like and get full visibility into what it is that we do. And we welcome investors to quiz us in terms of checking that we do things properly. And then the final part of that is that we have 3 independent non-execs on our board that have been skilled in Section 12J, and it is their responsibility to double check us that we are doing things correctly. What I can tell you is we take our compliance incredibly seriously.
Thanks, Kevin. I've got something from Bronwell. She just wants to know, how do I reinvest the dividends and what happens when doing so with regards to compound interest?
Sorry, what happens when?
She says, how do I reinvest? I think she's asking, how does she reinvest the dividends, and is that possible with the 12J, you know, after year 1, 2, 3, 4?
Yes. So we pay out the dividends in cash. There isn't a reinvestment option, but the only way that you'll be able to reinvest is every time we then have another tranche that opens in February 21, and hopefully every February thereafter, if the sunset clause is extended, is then to reinvest back into our subsequent capital raises every year.
Okay, perfect. There's just 2 questions on sort of the lifetime use of the product. Michael and Yolani want to know, how's the income for people who reinvest protected over time if the efficiency of installed equipment drops naturally over time? So how's, you know, the longevity of the product?
So that is a very good question in terms of the degradation of the panels. The panels degrade by about 1% a year. They are warranted to be at 80% efficiency after 20 years. What's interesting with solar thermal, this heating of water, is that those panels don't degrade at all. So it's a very nice diversifier from that point of view. The reason why, even though we have this 1% a year degradation, the reason why we are able to grow our income is because of the expected future increases in the NERSA escalations. So those escalations are growing much faster than the degradation and much faster than our cost structure. And as a result of that, we are able to then have this growing future expected dividend stream.
Excellent, thanks, Kevin. Peter just wants to know, is there upside potential above 21%? And if so, how significant do you think it is?
Peter, we are not forecasting upside, but there is potential upside, and the critical assumption that we've made is that post 2020 and 2021, when NERSA have already disclosed what those escalation in the tariff is going to be, we have assumed an 8% escalation from 2022 onwards. Now, we know that assumption will be wrong, but we don't know where it will be wrong. We don't know if it's too low or too high. And if future escalations are above 8%, then there will be upside. And similarly, if future escalations are below 8%, then there is a possibility of some downside. We do also, one of the risks that we do highlight is that there is a possibility of future escalations being negative. You might find that quite hilarious in the current situation, but we do foresee a stage at some time in the future when electricity prices will just become too expensive and the utility will be forced to lower those prices. So that is a risk that you need to bear in mind. We love the diversifier of bringing in solar thermal and the atmospheric water generation, because whilst we do see a decline in electricity prices at some time in the future, we don't see a decline in water prices because we do foresee quite a significant water challenge across our drought-stricken country, and we do therefore see water prices escalating actually far faster than we do see electricity prices going up, because our water quite simply is still too cheap. And given the amount of infrastructure development and maintenance that needs to happen, we think water prices are going to go up quite quickly.
Excellent, thanks, Kevin. I've just got one more question at the moment. It's from Dave. He just says, do you envisage a stock exchange listing in the near future?
So Altex have committed to creating a Section 12J board. We have absolutely no interest in listing. I have actually been a director of a listed company before, and when we look at our model, it doesn't make sense to be listed. I think from a scale point of view, the whole listing process is very expensive. So we really have countered that by providing this committed buyout price, which then provides that future liquidity to investors that wish to exit.
In other words, it's a 5-year investment, and if you want to trade it, I guess if you were listed and you wanted to trade it, you would presumably have a tax event as well.
Well, in the first 5 years, you would have a tax event, but thereafter you wouldn't. But the problem is, because it's a relatively small cap company, it would be very illiquid. Price discovery would be very imperfect, and therefore your bid offer spread between your buyers and sellers would be quite wide, and we don't think that would be in investors' best interest. And the chances are the price that we are willing to pay at a prime plus 2.5% discount rate would typically be above what an investor that doesn't have the same access to that information that we have would be able to pay.
Kevin, if you have a look on the screen now, the slide that's up there says the minimum subscription is 100,000. I think that has been well communicated, but maximum subscription per investor of 20 million. Now, you said earlier that there was a maximum of 2.5 million. Is that the amount that you can get tax incentives on, but you could put in 20 million if you wanted to?
That's correct. Now we wouldn't advise someone to put in 20 million because the 17.5 above your tax allowance would be far less efficient. The Section 12J allowance does make this far more attractive from a return point of view. So our suggestion to investors would be to cap your investment at 2.5 million per taxpayer per individual or trust, and 5 million per company, because it just really doesn't make sense. If you look at the returns X the 12J benefit, it's still a nice investment, but it's not nearly the 21% return.
What is it? Let's just say you have somebody who's got more money than sense, and they're quite happy to put in another 17.5 million. What return would they make on that?
So you'd be looking around about a 13% return on the balance.
That's
And
pretty
that's
good.
once again after tax return. So it's not too bad, but it's not nearly the 21% that you're getting on your 2.5.
Yeah, but I mean, where else can you get 13% in this market?
Yeah.
Not too places, eh?
So certainly, you know, there are opportunities. If investors do want to discuss that with me, they're welcome to do so.
Stu, any more questions?
Yeah, thanks, guys. Ernest just dropped one in. I think he asked, what happens if Eskom collapses? How would that affect this investment? I suppose you could also flip that. What happens if Eskom gets its house in order? How would that affect the investment, those two extremes?
So one of the risks we highlight is regulatory risk. And an interesting concept with regulatory risk, it is a diminishing risk from this investment point of view. Why is that? It is only a risk factor for us for as long as we are connected to the grid. Now, our long-term strategy is to take our clients off the grid, and we're going to do that through a multiple of means. Let's just stick to batteries at this stage. Obviously, batteries is not an off-the-grid solution. I don't really want to get into our future plans for 3 and 4 years' time, but our ultimate intention is to take our clients off the grid. Once you are off the grid, you are also outside of the regulatory framework. So let's say, for example, you had a game farm where Eskom can't give you an electricity connection. Well, there is no regulations that decide what you can and can't do from that power point of view. So exactly the same thing happens when you are when you cut your connection to the grid, even if you are in an urban environment, is that then you are unregulated from that electricity point of view. So the longer it takes for Eskom, either Stuart in your example, to either survive or to die, hopefully it doesn't die because the country is in desperate situation. But our clients, our intention would be to take them off the grid and therefore provide them with full energy independence over time.
Cool, thanks, Kevin. I see a few more have come through here. Vanessa just wants to get a bit more detail on the technical aspects of the product. She says, without batteries, the supply would be erratic and limited to good weather, question mark.
So Alec, that's a great slide that you've just gone to, thank you. We've given here 3 examples of our Solar Edge platform that show the 3 types of installations typically that we look at. And Vanessa, I'm coming back to your question, but just to show you here, Kempstar Mall on the left-hand side, this is a mall that we've installed in Kempton Park. You can see there the 41%, that little blue bar just above the graph. That's how much power we are supplying them. The only limitation that we have there is their roof space. We've covered the entire roof with solar panels. So we supply 41% of their electricity requirements. The second one is an office in Bloemfontein. You can see there we're providing roughly 46% of their electricity requirements. And then the interesting one on the right-hand side is a body corporate. The typical residential profile of the high morning and evening peaks and the low daytime usage. So if you think back to what I said earlier about the solar thermal, we will then be able to address an additional 55%. You can see we're only addressing 21% of their daily requirements at the moment through solar PV. Let's say we then go and put solar thermal there, we could add another 50% onto that. So we take them up to 70% of their electricity requirements, and then we'd bring in batteries to address those morning and evening peaks. So you're absolutely right, Vanessa, without batteries and or generator or alternative energy supply, you are subject, first of all, to load shedding. Very importantly, solar is not a load shedding solution. So if the power goes out, the solar solution goes down. So that is a risk factor that you need to bear in mind as well. If we have extended load shedding, then our revenue expectations will be affected by that. But once we then bring batteries into these solutions, that then provides that off-the-grid opportunity, which will avert that load shedding issue. I hope that's answered your question.
Just to make it a little simpler, Kevin, and help us out here, on Yonder Hill, so that's the body corporate.
Yeah.
Those red peaks there, which are kind of the shoulders to the blue, is that the power that the body corporate gets from the grid? In other words, from Eskom or the municipality or whatever. And then the blue is the solar power. Okay, and the blue they would pay less for because that's you're selling it to them at a discount. And I get what Vanessa is saying. Surely the opportunity there is to try and get more of your power in those times when there's peaks, so that if there is a problem with a municipality or load shedding or etc., surely Yonder Hill would be saying, help us guys, put in some batteries here so that we can protect our homeowners from times where we aren't supplied electricity by the grid.
100%. So it comes back to that lovely thing we all learned in our university careers, if we went, called a cost benefit analysis. At how much does it cost to provide and what is the benefit? Now, battery prices are coming down quite quickly, and we believe that batteries will become cost efficient sometime later this year. And then what we'll do, and part of the benefit, I guess, of the C tranche, the tranche that we're currently raising capital for, is to stand on the shoulders of the A and the B tranche, because we'll then be able to take batteries back to Yonder Hill. Yonder Hill is an installation that is owned by our A tranche investors. And there's a symbiosis then between the A tranche and the C tranche. The C tranche would then go and provide batteries to Yonder Hill, and the A tranche would then benefit as a result. So the C tranche is benefiting because we've got an existing customer. The A tranche would be benefiting because then their income stream wouldn't be affected as a result of load shedding outages.
That makes it sensible to me. Stu?
Cool, thanks, Alec. Just one, I think you covered this, but Robert just wants to know, do you think solar thermal systems will be as popular as traditional solar PV systems?
It's a brilliant question. I wish I knew the answer. My expectation is that they will be even more popular, and the reason is twofold. The first one is that we can address a far bigger consumption requirement, as I mentioned, around 55%. And the second reason is, in fact, there are three reasons. The second reason is that they are solar thermal is more efficient than solar PV, so we'll be able to pass on even bigger savings to our customers. And the third one, very importantly, is that it comes with the built-in storage, being that that geyser stroke boiler storage that stores the hot water. So you heat the water during the day and it remains hot for you to use at night.
Thanks, Kevin. Robert's just got a follow-up. He says, what's the minimum electricity requirement for a business to be eligible to have a solar PV system funded and installed?
So we look typically at about 30 kilowatts as our minimum installation size. So anything from 30 kilowatts and up, we would look as a potential client opportunity.
How big is that? How 30 kilowatts? How many houses would that be, say, in a complex?
That would be kind of about, depending on what their consumption patterns are, I would say about a 45 unit complex, 30 to 45 unit complex roughly.
And a business, the 30 kilowatts, what's that? Or maybe take an office. I see these NRE offices, which is on the screen now. That's 101 kilowatt. Is that right? Is that what they consume?
That's right. Yeah.
And how big, how many meters would they occupy, just for argument's sake?
I don't know the answer to that. I don't know.
Okay.
But for anyone that is interested, all you need to do is email me your utility bills, either in a complex or in a business. And what we'll do is we'll run an analysis of that for you. And we use phenomenal software that incorporates Google Earth. So we look down on your roof, We can identify if your roof is suitable for installation of solar, and then we'll come back to you typically within a week with a full proposal of what the kind of savings that we could offer you in terms of either solar PV, or if you are a user of hot water, either in a commercial or residential environment, we then also look at what your hot water requirements would be and what your kind of savings could be from that point of view.
Kevin, I'm just trying to work something out here, which is quite interesting. If you have a look at that NRE offices again under lifetime, it says 82,428 Rand. Is that their monthly bill? So, i.e., if that was 101, if you divided that by 3, if you have a monthly bill of 30,000 Rand, would that be the level that you can start thinking about an installation?
Alec, I think if you are paying in excess of, say, 15,000 Rand a month, you should be looking at fully funded solar opportunities.
15 grand. Okay, so it's quite a low. It's quite a low.
It's quite low. Obviously, what we do is we have to assess that, but we certainly, upwards of 15,000 Rand. If your roof is suitable, there certainly are opportunities for us to work together.
Okay, so I think that's Robert probably has more of a guideline now. Stu, any more questions?
Thanks, Alec. I've got one from Peter. It's on the tax certificate. He says, will a tax certificate be instantly available upon payment to Brightlight Solar to submit to the payroll department to enable a reduction in pay in the current month, rather than needing to wait for submission of tax return and SARS assessment, etc., etc.? I'm not sure that's
immediately available. We provide all of our investors with IT3Bs within 3 days of our closing. So we're closing on the 25th of February. By the 28th, in fact, we've got an extra day this year because it's a leap year. So by the 29th of February, you will receive your IT3B. That really is a confirmation of your investment. You're welcome to take that to your payroll department. I think they are bound to deduct PAYE from you, and the only way you can get that back is through filling in your tax return, and then you would then have to get that refunded to you from SARS.
It's a good incentive to get your taxes done quickly because if you're getting a rebate, and you know you will be, and SARS is quite jacked up. I believe they got rid of all the baddies and they've replaced them with some pretty good people. That's what I understand. I'm not. That's the talk from within SARS. Then I know with my tax returns, it doesn't take them long, 2 to 3 days, and they come back.
And in many cases, if your return is relatively simple, the system will assess you immediately and provide you with an assessment within an hour.
Sure, even better. Wow. Okay, so there's a big incentive then. If you put your money, you make the investment, you know you're going to be getting back some of the tax that you might have already paid through PAYE. So get the tax return in soonest, and that you'll get your hands on your cash even sooner.
Yeah.
Cool. That's it from my side, Alec and Kevin. I've got no more questions coming through.
Well, we have nearly got to an hour. So if there are any final questions, we've got about 5 minutes that we continue with. Kevin, I've got on the screen here. I like this slide because it gives you an indication of some of the projects that you've done.
So that top left is the Supergroup Distribution Center in Jet Park. They have a very substantial frozen and refrigeration unit. So they're using a lot of electricity. We've, subsequent to that photo, have extended that available roof area on that north-facing roof. The one that you can see has now all been filled. So that is now just under 1 megawatt. And so that's up and running, and they're very happy with us. Yonder hill on the right-hand side, we included that to show you our carport structure. So where, for any reason, the roof is not really strong enough to support our solar panels, or alternatively, if the body corporate rather elect to go for a carport structure, there you can see what our carports look like. Bottom left is a company called Medicine World in Lombardy East. That is an industrial manufacturing business. There you can see that was a relatively simple rooftop installation. And then I mentioned earlier Kempstar Mall. You can see pretty much almost as far as your eye can see the extent of the installation there. The only little bit of white roof space is in the front, but you can kind of see the shadows there. So that part of the roof wasn't eligible for solar because of the panels.
Kevin, what I like there, and maybe you can help us through, but it's also what you guys are doing is also doing a lot of good, because on the one hand you have Eskom, which needs help in electricity generation. So anybody who's generating electricity will make it less load shedding for anyone else. But just looking at the numbers that you've got here, annual CO2 emissions avoided and annual water use avoided. So you're helping the planet too.
So that's really a lovely angle. Alec, you've mentioned many times on your show this move towards ESG investing, the environmental, social, and governance requirements that investors these days are looking for. And we fall squarely into that ESG bucket because we are environmentally friendly. So the CO2 saving, and if you think about how energy is produced, you use coal. Coal is used to superheat water. That turns the water into steam, and as we know, as water turns to steam, it expands, and that expansion is what turns the turbines and is then used to generate electricity. So by avoiding using electricity from the local utilities, we are saving both in terms of CO2 emissions and also saving on water usage. And what we do is we measure all of this and report back every year in terms of what our CO2 and water savings are as a result of using our investors' capital to erect these environmentally friendly installations.
Stu, we've literally got 2 minutes. Is there a last question?
I'm all blank this side, Alex. So I've got nothing extra to unfortunately ask. But
well,
yeah.
Then shall we give it to Kevin for the last 2 minutes? Do you want to just wrap up for us?
Great. So thank you all for your time. I really do appreciate you staying on for the hour. If anyone has questions and if you don't have access to our prospectus, you can go onto the Biznews website and log on there. Alec, will you just give us a web reference for that page?
Well, that's even better. What's up on the screen now is
fine.
Phone you or send you an email.
You can email me. My cell phone number is there as well. You're free to give me a call. If you got any questions, please feel free to contact me by cell phone or by email, and I'll do my best to answer your question. Bear in mind, we do have just 2 weeks to go, just under 2 weeks to go until the close. We do then just take those 3 days that we need to get all our admin ducks in a row and be able to then provide you with those IT3Bs. But hopefully you can get some kind of idea about why we are so excited about this investment opportunity. Not only are we doing good for the environment, but we're doing well for our investors as well. And it's done in a very low cost, low risk structure that then passes through those benefits to you as investors. So thank you very much for your time.
And a pretty cool return of 21% effective from tax. From a business perspective, when you go onto the site on the top right-hand side, you'll see the little search function. Just put in Bright Light and everything you need will come up. All the podcasts that we've had and this webinar. Stu, when are we likely to have the webinar up for anyone who wants to watch it at their leisure?
Yeah. Thanks, Alec. Yeah, we'll do our best, but most likely it's early tomorrow morning will be a better time. So, and it'll be live, free to air, obviously, on the website.
Brilliant. Well, thank you for joining us for this month's investment webinar. It's brought to you, obviously, by Bright Light Solar. So I'm pleased that you were able to join us, Kevin. Extremely erudite, thoroughly enjoyed it myself. The hour really flew by for me, and I hope it's been the same, given the high retention rate, or we can see how long people have been on and if they're interested in whatever. There's still a lot of, most of the people are still on now. So thanks for sharing all of that. And to the Biznews community, thanks for your participation this evening from me. Cheers.